Thanks for joining us today. I'm Michael, I'm co-founder and CEO of Qonversion, and today we are going to talk about subscription app valuation, ways to increase it, metrics that are important to sell your app or fundraise for your app. And I can think of anyone who's used this conversation better than Alon Waller. Alon is a founder and CEO of Bluethrone, and this company actually buys subscription apps. So he has first-hand experience and knowledge on the subject. Hi, Alon. Thanks for joining us. How are you today?
Hi, Michael. Happy to be there. And the real thing is with subscription apps. Once you optimize something, maybe it will create some additional value for you. But what happens, and this is what we are going to see today, what happens when you put the layer of the evaluation on top of it? And this is the great thing that we are going to see today. So I'm excited to just get started with it.
Yeah, absolutely. So a couple of notes from my side before we jump in. So everyone who joined the webinar is automatically muted. And if you'd like to ask any questions, please use the chat bar on this platform. We'll have some time to answer the questions. And there will be like two fairly short presentations, one from myself and the second one from Alon. And we'll have some time to answer the questions after the presentations. And also the webinar is being recorded. And I think we'll be able to share the recording in a couple of days after the webinar. So without further ado, let me start. And I actually wanted to start with app market overview and why mobile apps are highly attractive business for investors. I personally believe that you can build a big app business and sell it or raise investment to it successfully to grow faster. And these numbers on this slide are here to confirm it. So so the market is huge already. It's estimated at $85 billion in 2021. And at the moment, 35% of the total in-app spending is in the non-gaming segment. The rest is in the gaming segment. But there are two important points here. The overall market is growing at 25% annual rate, and it's projected to double by 2026. And the non-gaming sector is growing more rapidly. So the share of the segment is going to increase and be above 50% by 2026. And subscriptions are used mostly in the non-gaming apps. So the subscription app market share is growing even faster than the market overall. I think all of this points to the fact that there's definite opportunities to build big businesses there and make successful exits in this type of businesses as well. And now I wanted to share some tips from my side. They are more about the tools, the infrastructure that you need to power a successful subscription app. And the first one is just as simple as you do need stable and easier to maintain subscription infrastructure, because one of the things that you need to be able to handle quickly, if you are selling there, for example, you need to be able to hand it over to a company that acquires your app. And if you have a complex infrastructure which is hard to maintain, and you need full-time engineer to maintain it, it might be harder to sell the app. So ideally, your subscription monetization engine should cover all subscription corner cases, track different internet product prices, plan changes, upgrades, downgrades. You should be doing server-side receipt validation to track all subscription events accurately. You probably also need a cross-platform subscription management if you want to handle subscribers across, let's say, Apple App Store and Google Play Store. And it should be easy. Once again, it should be easy to hand it over if you decide to sell the app. You can try to build this type of infrastructure in-house, but you're likely to waste a lot of resources, time, and focus on building that instead of focusing on your own product. Here I'm showing one of our clients, Fitia app. It's a dieting app. And these guys actually tried building some of this infrastructure in-house. They spent 6 months, spent a lot of resources on that, and eventually they still had a lot of issues, and they decided to just implement Qonversion and save a ton of time and they stopped focusing on building subscription infrastructure and start focusing on building their actual app. And they were accepted to Y Combinator, which is #1 startup accelerator in the world, and pretty much they're growing nicely since then. Let's switch to the next tip that I wanted to share, and it's about keeping your data in one place. I think the ability to clearly communicate your financial and other metrics with potential investors or potential acquirers is very important. And sending over multiple spreadsheet documents, slides, it's not the ideal way to handle it. If you have all the analytics and metrics in one place, you can just share the read access to your dashboards, and it will save a ton of time for both parties, for you and for potential investor. Now, let's get to the metrics. Of course, you should know the metrics that affect investor decisions. And I think the most important metrics are your monthly recurring revenue, MRR, number of active subscribers, lifetime value, LTV, and customer acquisition cost. So monthly recurring revenue stands for, it basically represents the amount of revenue your company expects to generate every month. And the next one is LTV. It's how much revenue you are getting from a subscriber on the average. And you can have some additional metrics around LTV, for example, like 1 year LTV or 2 year LTV. But it's important that you do understand this metrics, that you do track this metric, and you should be actually focusing on maximizing the LTV. And of course, it needs to be higher than your customer acquisition cost to be able to scale your app profitably. And you can easily track your actual historical LTV with Qonversion cohorts dashboard. It's one of the places where you can find and quickly see your historical actual lifetime value for each cohort of subscribers. And I think it's worth spending a couple of more minutes on LTV. So here I'm showing on this slide, I'm showing like the simplest formula to estimate your subscriber LTV. It's just the subscription price divided by the churn rate. First of all, from this formula, it's obvious that you actually need to monitor your churn rate as well. And your churn rate directly affects your LTV. The higher the churn, the lower the LTV, and you need to work constantly on reducing your churn. This formula is pretty basic, and the real world is more complex than that. The calculations that you need to run for subscription apps are more complex. This formula works just for the linear churn case, but you can check this. This QR code is to my blog post, to a detailed article with detailed calculations for subscription type apps, and there is even a spreadsheet there that you can use to quickly get estimates and forecasts for your LTV using several historical data points that you can get, for example, from your App Store Connect account. So that's it on the LTV. Let's talk a little bit about the churn. So I think, as I just showed, it's really important to reduce the churn to increase your LTV. And first of all, to start with reducing your churn, you do need accurate data on the churn, and you need to distinguish between voluntary and involuntary churn. So involuntary churn happens when, for example, the payment information on the App Store is not up to date and Apple simply cannot make charge. And voluntary churn is when a user makes conscious decision to cancel a subscription. Once you have accurate data to distinguish between these types of churn, you can automate communication with your clients, and basically you need to remind to have up-to-date payment information to users with billing issues, and you should poll the users that are canceling voluntary to understand the drivers behind the churn and be able to address it. By the way, in Qonversion, you can set up some win-back campaigns with push notifications to prevent churn. Actually, this is highly targeted, so you can basically distinguish between these types of churn, and you can have one message for those who are canceling and another message for those users who are having billing issues. And the last tip from my side, I think it's important to mention the App Store optimization and Apple Search Ads. It's really important to pay attention to the organic traffic that you are getting there are a lot of tools to measure it and improve it. I personally would recommend AppFollow or ASO to manage your App Store optimization. And one of the tricks in increasing organic traffic is also investing in Apple Search Ads. It's a known fact already that the more users you acquire through Apple Search Ads, the more organic traffic you get from Apple. And good thing about Apple Search Ads, it's the only acquisition channel on iOS currently that functions independently of SKA ad network. So you can attribute 100% of your marketing costs to advertising campaigns on campaign and even on keyword level. So you can have real transparency in your marketing performance for Apple Search Ads. And we do have this attribution tool in Qonversion that you can leverage. So that's basically it from my side. I think now we're ready to the most interesting side of this webinar with Alon, where he'll share some insights on how they think of buying apps, what are they looking when they're buying apps, how they decide how much to pay probably for an app. So Alon, happy to hear what you have to say about it.
Yeah, so let's do it. So, Michael, you talked about things that might seems to be small, like, hey, let's work on the churn, or let's work on the subscription side, and then the LTV will increase. But what we're going to see now is how everything is getting connected, and then we put the multiplier layer on top of it to make it, I don't know, explosion in a good way. Okay, I just simply jump into it, and let's start. So how does a subscription app multiplier is set? Michael, we see every app valuation kind of like a crime scene. I don't know if I can turn on this nice GIF, but this is not a Netflix movie. Essentially, when we are looking at an app and we are going into the numbers, as you said, and the LTV and the churn and the second cycle churn, third, and so on, we are trying to make sense of the story and understand really what is the essential value of this app. So we can understand that every app basically has its own story. It's a story that full with numbers that sometimes the developers, I don't know if to say hates numbers, or maybe they're kind of like more like a tech artist, so they want to ignore the numbers thing. But in subscription apps, this is a very crucial indicator of the health of an app. And I will show you in a second a real example that we will see two apps and we will put them, side by side. And then we will see that although both are making like $500,000 per year, one is going to die pretty soon, and the other one is a great asset for investment and also gets a much higher valuation. So the goal is to understand all the numbers and all the story. And as we are looking at a lot of apps and trying to get the story and understand what is going on, also the developers, in order to optimize the app, they need to go inside the numbers and see, the KPIs, in which, of course, Qonversion is already like doing for us half of the work by showing it to us, which is not make sense from App Store Connect, not at all, to be honest. So what I'm going to show is basically the thing that the developer need to do the other way around in order to optimize it and then get a much higher valuation, or even raise money, because investors are looking at these same KPIs. So let's jump into it. Let's jump to the crime scene. So the first evidence is if the app is growing or dying. And we can see here two apps. One, app A, is making $567K per year. The other one is $488K per year. And, without going into the numbers and digging into all the KPIs, it seems like both apps are doing amazingly and probably worth pretty the same, right, Michael? This is the first like thing that pop up into our mind. But what do you think, Michael? What I'm going to
Yeah,
show here?
yeah. From like it's hard to decide, but we can just these revenue numbers.
Exactly, yeah. So if we dig into the numbers, we in Bluethrone internally we call it like new money and old money. Basically, it is the new money and renew money, which is completely different thing in which we must identify. And let's see this amazing example. And this is a true story example, Michael. Like these two apps came and apply for an exit. But once we uncover all the real numbers behind it, we start to identify a big problem in App A. So what we see here is that App A has only 5% of new money, which means it relies on 95% of all subscription money. So although it makes 488K or even more, 500 plus K App number A, um, still like it is a dying app. And App B is about 50% of new money versus old money. So there is a good balance, Michael, between the activation, and we will talk about it and see in Qonversion how it's like instantly we can see it and get this indication. Um, but 50%, I will say, is a good rate. Also depends on the life cycle of the app. If the app is starting to grow and just implemented maybe subscription, of course we expect the new money or the activations that will be like 80% or even 90%, and then there is the old money that just like support the app and keep it high in the sky, I would say. So like look in App Store Connect, like it's really hard to get these numbers, and I'm not even go into the country dimension. So everything we see here might be seen also in the country dimension. So maybe in the US it is growing, but in the UK it is dying. And if you are not aware that this is the trend of the app in terms of old money, new money subscription, then you might lose a big chunk of your money and essentially a big chunk of your app valuation. So here what we can see is the in Qonversion, like we differentiate the two events for subscription started and subscription renewed, and like this we can easily and instantly see the ratio between them. In this case it's about 23% new money, and the other way 7% old money, which is not so healthy in this case. And as I said, if we are going deep dive now into the country level, then we can start to identify that the US is pretty okay, and then France is maybe going slowly down, and Germany, and so on and so on. Like in few clicks, we can get crucial indicators. Michael, sometimes we in Bluethrone we think of it as a cockpit in a flight, right? You need to have the right indicators, and for a flight for inside the cockpit itself, there are a lot of buttons and stuff. So maybe you are not getting familiar, but in the app subscription business, it's pretty essential to know the new money, renew money, LTV, and these very important indicators in order, to take your flight safely, maybe to the exit. I don't know. So this is how we use internally also a Qonversion in order to get these indicators. And if a developer is applying for an exit, there is a big difference if he has everything already set up that he can let us like see in a limited view access or something, all the KPIs indicators. This makes our life much easier, and of course it creates a better valuation because now we can see the real data, and we are not using some kind of estimations that might hurt the app valuation itself. So if we are talking about a possible explanation for a dying app, this was only one like example about old money, new money, but essentially there are like a niche in decline that might be, let's say, the crypto niche now is currently in a deep dive like the crypto itself. So this is something like, nobody, unless he willing to, expose to the crypto coins, will go into investment on a crypto app at the moment. So a niche in a deep dive is a one thing. Sudden loss of keywords, real estate. Once we are checking an app like that apply for an exit, we are also seeing the keyword real estate. And the more you are relied on one keyword per one country on one platform, the more risk you have to lose it all. Okay, so we are like mapping the real estate. Let's say in the US we have like 20 keywords, and then in the UK so on and so on, and in Play Store and in App Store, and then we can understand the level of risk. And the less risk there is, the better valuation you'll get, of course. The next thing is a competition with better value or offer. Your app should be a great app. We call it internally a product market fit app. It should deliver a real value, not just connecting to some kind of API and somebody can copy you in a matter of seconds or hours. So this is another thing. Unhappy paying users. Of course, we see the bad ratings. If there are too many bad ratings, this might be a problem. We do understand, for the subscription apps, bad ratings like, hey, you need to pay in order to get something. Of course, we will ignore these kinds of ratings. But if there is something like real scary, also the developer need to be scared and do something about it. And the last thing is outdated onboarding, if any. Everything that inside the app, which is like you see some kind of neglection and staying behind the pack or the competition, is also an alarming from the investment perspective. So let's move on to the second evidence, the three-step subscription funnel. So I won't say that every app has these 3 steps, but most of them have it. So we are talking about downloads that convert some of them to free trial and then to activations. So when we look at an app, we carefully trying to see these 3 KPIs in order to understand the health and the monetization level of the app, and of course the willingness of the users to pay something and to subscribe. So here we see, for example, some kind of app that has 1,600 daily downloads, and the free trial conversion is 13.9%, which means from this 1,600 only, or not only, depends how you look at it, 13.9% converting to free trial. So they start using your app, and then from them the activations are 30%. And this number that you're seeing now, I would say that anything beyond the 10% conversion to free trial is a good health indicator for a subscription app, and then 30% and above for the activation to become a paying user is also great. So in conversion, like you can, I don't know if you see it because the picture is quite small, but the KPI is already there waiting for you. And you can see that user conversions to free trial, you just get it instantly. And again, I will not go into the country level, but when we are looking at it up, we will do it. So maybe you should do it as well with one more click in this dashboard. And then we have the conversion itself from free trial to a paying customer. And Michael, I also really like the way you put the terminology on these things, because if you're going and trying to figure out this in App Store Connect, they find some kind of words that you're not really understand. You don't really understand if this is what they mean or not. And this is like for the simple, straightforward wording that you understand instantly what is going on.
Yeah, I think like they use activation, and sometimes it's kind of tricky to figure out are they talking about trial start or trial conversion into paying subscriber. We try to make it really straightforward. in our documentation.
Also in Google Play, it's a different wording, a different story, and then there it's harder to differentiate between the free trials and the paying users. We've been there already until let's use the software that will do the work for us, and focus ourselves in what we know to do, how to evaluate apps, not just playing around with the numbers. So what we will see now is the power of tiny optimization. This is what I talked earlier. So let's say the yearly subscription price is $6.99, and as we saw, the downloads is 1,600, and the free trial conversion, as we spoke, 13.9, and then activation 30%, resulting in a daily revenue of $466. But what if we put an incremental optimization on these various 3 steps? So it is not that hard to put these numbers in a focus and then increase it, every indicator, in 10%. I've been there, and this is what we are doing. We are buying the assets themselves, and we just, we are not magicians. We are just doing the hard work and focusing on these KPIs with our team in order to optimize this app. So here we have, like, if we optimize the download, so we now will get 1,760, and then the conversion will be 15%, and then the activation will be 33%, resulting in, $621. So maybe just, I don't know, $200 more, a little bit even less, that we get. But let's see what happens next. This moves me to the third evidence, the insane power of the multiplier. So if we are going back to the chart, as we saw, we are now at $621 from this 10%, 10%, 10% optimization. So let's say we use a 30 months multiplier when we evaluating an app or a developer is willing to apply for an exit. 36 months is pretty, I would say, like a common multiplier. You can have even like a multiplier like 48 or even more if your app is great and all the indicators are really great and healthy. But you can have also less, like 12, 18, 24 multiplier. Again, depends on the essentials, KPIs, and how healthy your app is.
Yeah, can I interrupt you just for a second here? I think it's really interesting. We already do have a question about that. I think it's interesting to see the range. So if I understood you correctly, it really depends, right, on all this data, details of the specific app, but you can probably expect something from 12 months in revenue up to 36 months in revenue, or even more, depending on the app, right?
Exactly. Like 12 months is like your app is not healthy, and probably either, I don't know, you're doing some kind of user acquisition in which you will recover the money in 2 years or something. So then, of course, we take it in consideration. Or maybe 36 is like your app is much more organic, and you leverage also with ASA campaigns, which are scalable. So we take everything in consideration, but the KPIs that I'm sharing here, like, are the most crucial parts. Like, these will determine if you will get the higher ballpark or the lower one. So,
got it.
Some other questions about this?
No, I think we're good.
Awesome. Great. So, original app valuation was with the normal numbers of $699 and then 1,600 and so on, 500K, $500,000 for the app that before optimizing and going into the details. And then once we slightly optimize the app, the valuation jumps toward the $670K, almost $700,000. And if you really, or as we call it, truly optimize your app and get into the numbers and work on it specifically and invest your time and with A/B testing and with different onboarding screens and different subscription price, then you might get even a 20% increment for each indicator. And again, once you put your focus and time, it's not that difficult. I can tell you that in the offer screen, every word matters, and the pricing matters, and the way that like in Bluethrone we are checking like more than 10 different offer pages. Like one is long sales page, and one is short sales page, and one start with a different message on the top, and the other one is start with another one. So this is how we going kind of like into the lab, and then experimenting, and then seeing what results the best. I think also in Qonversion you can do the A/B testing quite easily, right, Michael?
Yeah, absolutely. Sorry, I was on mute. We do have A/B testing module, which is specifically designed to help you figure out which in-app price works best for your app. So it's definitely worth checking out.
Yeah, awesome, great. So we are here already with a 20% increase on the 871K. And I don't know why, Michael, but for a lot of developers, they have the $1 million ballpark in their head. Like they are willing to sell their app if it really makes sense, and it's go to this kind of heights for $1 million. Maybe they want to flex on their friends or something, or maybe I don't know why,
Yeah,
but
it's nice, a nice
it's nice.
amount of money.
Yeah, you can go maybe to the celebrate in the evening in the pubs, and hey, I did an exit for $1 million. So I'm something already. I built something that's worth $1 million. It's a great thing, even though
Yeah.
it makes, I don't know, per year 300K, or I don't know, even less if it's really healthy and optimized. So with a slightly increase in price, and the $699 goes to $799, but then once you're taking in consideration the LTV and the old money that will accumulate over time, then you start to understand and you have a real asset in your hands. And this $1 million, and we can maybe round it to the $1 million in this case, to just give it as something that the developer deserves, and go for the next project or for the next thing he wants. So how the heck did we double the valuation from 500K to $1 million? The insane power of a multiplier on a multiplier, and this is exactly what we just saw now. So super tiny 10 to 20% subscription app improvement can actually, Michael, double your exit package. So maybe now the audience understand that, hey, this is worth my time. It's not just a $100 more or something else. And of course, this works the same as it works for the big numbers. It works also for the small numbers. So it's not just like that you will have that every developer will have a $1 million app valuation. It is nice. It is good to aim for it, but essentially, even $500,000, 300,000, or even 200,000 K is something that help you to move to the next thing. So additional valuation factors, like these are the most important, the most common, the first KPIs that we are taking a look at. But we have the listing optimization, like if the listing is optimized and convert from impression to download. Niche risks and threats, like all the dating apps are more risky, and or casino apps or something like that Apple or Google might give you some difficulties to upload new builds and so on. ASA optimization, again, we are taking a look at the ASA campaigns, Apple Search Ads. Of course, if we see that you have some keywords, we call it internally money-making keywords that actually converts downloads to activations, to paying users. As long as you have as much as of them, then of course your app value increased. Recent trends, it is better to sell when your app is like growing and not starting to deep dive. Market size, so if you are playing with a very niche small market, let's say, I don't know, inside the birth niche. Then you have some kind of maybe Christian birth or something like really niche that we cannot understand how it can grow and be massive. Then it is a problem. Of course, we are using AI predictions on top of the current numbers. We are applying our formulas to see, hey, what is going to be like with these trends, with these numbers, with this LTV, and with the optimization that we see as opportunities, where it will grow, basically. Then we see the app age. This is important. Like if your app is just 3 months old, you better to keep it, work on it, and optimize it. Because like it's kind of like a wine, right? The more the app is there, growing and being stable, the higher valuation you will get. So I would say that at least 6 months is a very good minimum, but like more than 12 months or even, I don't know, 18 months says a lot about your stability of the app, and you will get a higher valuation. And offer conversion rate. This is again a crucial indicator, like from the people that see the offer, unique users, how many actually convert. It's not only saying a lot of things about the product or the offer. It also said a lot of things about the customer or about the avatar itself, if he's willing to pay, or maybe he has some better solutions out there. So how the app sale process looked like. So we are talking about a 21 days valuation in which developers that are interested to apply for an exit can use our free online app valuation tool that we will see in a second. And then we start the first stage of on-surface valuation, like you get some kind of first valuation from the KPIs before digging into the numbers. Of course, if you have conversion, you will get it much faster because we see everything like in a few clicks away. And then we have the second stage is a deep dive valuation. This is where you get an official offer from Bluethrone, and you can know, hey, my app works this way. You can either choose to sell it or to keep working on it. And you even get from us some kind of summary of the things that you might need to work on in order to improve the evaluation. And then you can come back in 90 days or in even a year. And then maybe after you optimize everything or everything that is essential for increasing the evaluation, then it make more sense for you and for us to go for it. And then we have the closing and the exit. And this is the 21-day selling your app process. So if somebody is interested in, like, maybe just from curiosity or really want to go into this process, he can go to bluethrone.io and then get free app valuation there with a few clicks away. And this is it, Michael. What do you think?
Absolutely. Super interesting. I think you're right. Even if someone who is working on the app owner, he is not thinking to sell at the moment, it still might be worth checking out what's the potential app valuation, how to think about it, to be more strategic about building the app. So it can be a good option to just understand what's the current valuation of the app. We do have some questions there. I think you should be able to see it as well. I can actually read them. Most of the questions are about app valuation indeed. So the first question I can see here is from Chris. Do you buy pre-revenue apps? If someone, let's say, has an app with some downloads but there is no revenue, is it something you would look at or no?
Like, does it mean like if we buy just subscription apps or also ads revenue apps, like apps that are monetizing with ads?
Unfortunately, there are no details here. So it's up to you how to answer it.
Okay, yeah. So essentially, we are buying like every good app that has this product market fit. Of course, it should convert somehow and monetize somehow its users. So any kind of monetization will be a great indicator for us that this is something worth and this is something that we might get into and then evaluate it carefully.
Yeah. So the next question is basically it asks, do you guys have any tips to organically grow my app so I can be ready for a good valuation and exit? So from my side, I would say there are a lot of things that you can do to improve your organic growth, and you definitely should dig into Apple App Store optimization and also into leveraging search ads. You definitely should try buying some ads, and as I mentioned, this organic traffic is actually linked to paid traffic, and if you scale your paid acquisition, you'll see that your organic traffic increases as well. So it's something to definitely think about. Do you have anything to add to this?
Yeah, so about of course the ASO. This is like everybody doing it. Some doing it better, some maybe a little bit less better. But the thing that you say with the Apple Searches campaign. So once I will say that not all the keywords are equal. So some keywords has a low intention for buying, and some other keywords has a great intention of buying. And how do you know? You basically need to use some kind of tool to get this data and understand. Hey, this keyword convert from download to free trial in this number, and then to activations with this rate. So I will take the extreme example. Let's say you have like some kind of QR code, and then somebody type free QR code app, something like that. The intention is free. I'm not saying that this keyword will convert less. We will not know it until we will apply it and see it in the ASA tool that will show us the revenue per keyword. But once you identify these keywords, you can focus on them also in the ASO. So this works like in a cycle that you find new keywords, maybe even long tail keywords from the ASA campaign that convert to free trial and then to activations, and then you optimize your ASO. And this goes again and again and again and again. And in the ASO, you should, there is a limited space of real estate. So you should choose carefully the right keywords, and you can get these indicators from this ASA as I just shared now.
Yeah, absolutely. That makes a lot of sense. I agree on this completely. Let's see what some other questions are. So there is a question on the valuation range relative to annual app revenue. I think we have already discussed that. So it's like from 1 year, 12 months to like 36 months, but it really depends. I think the correct answer is it really depends on the metrics inside and everything that you have shown in all those slides. There is a question, what is the minimum revenue for an app? I think they mean like what's the minimum
to be considered?
To consider. Yeah, exactly.
Yeah. So let's say like it must has at least 5,000 downloads. Okay, in order like to be considered, like even if it's not making money at the moment, which is bad. I don't know why. Maybe we should work on the monetization first, but at least 5,000 downloads, and I mean in a month. Okay, makes sense to go for this exit route.
Okay, yeah, that makes sense. Another question is, rather than an exit, do Bluethrone work with an app to help them grow in return for equity? So basically, the question is, do you invest in the apps? Can you invest to basically acquire some part of the app, share in the app?
Yeah. So again, we had a few great apps, great assets that comes also with great developer, like that we understand, like that only with his value, like the app is tied to the developer skills and deep understanding of the niche. In this specific situation, we might go to the partnership route. But again, this all depends on the niche, on the complexity of the app, and of course, how much the developer is willing to stay in the game and to keep developing it using, of course, much more resources from our side.
But in short, you can say yes. So you can consider something
It's
like
possible.
that. It's
Yes,
possible. Okay. So the next question is about ASO again. What is a good number of keywords to have in an app? Obviously, they have to be relevant, but further to this, there is a threshold in the number of keywords to start.
I won't say, because some of the keywords just worth more than other ones, and if some keyword has much more traffic and the buying intention is higher, then of course it's worth more. I would say that if your app is relied on one keyword per one country, per one platform, this is bad, and it's only a time until you get hit from some kind of change or competitor, or even black hat things that competitors might do for each other with incentivized traffic or something like this. So it isn't a good sign to have very few keywords that are keeping your app alive.
I think there are some of these questions on ASO optimization, and it's just entirely topic that deserves its own webinar or a lot of webinars, right? It's already an industry. There are a lot of tools to leverage it, a lot of materials, so a lot to learn about all that. So another question is about what criteria must an application meet in order to be sold. I think you actually already explained some of the criteria you're looking at. And the question that pops into my mind when looking at this question, are there like any specific countries, legal entities that you can acquire? Are there any limitations on that? Are you working like with mostly European founders, US founders, or it doesn't matter?
No, it doesn't matter. We have apps and companies in the US and the UK and in the Netherlands and in Denmark, and so it doesn't matter as long as the app is real product market fit app with these KPIs and healthy. Yeah.
Okay.
It is qualified.
Got it. And the last question here is pretty technical, and the question is, do you have any general tips for optimizing the conversion? Basically, how to go from 30 to 33%, for example, in conversion rates.
Yeah, to put it in front of your eyes every day, okay, and start to think about it every day, every hour, and not ignoring it like most developers are doing. And you can even I don't know, shoot for your Slack or something, or a message that will remind you that this is the KPI today. And once it will be in your head, then you will start to think about it. And once you start to think about it, you will start to do actions, proactive actions, in order to optimize it. And of course, that at the end of the road, there might be a beautiful exit. So why not?
Yeah, absolutely. I have just one thing to add to that, is that you can use Qonversion for that. We have recently introduced monitoring mode in Qonversion, so you can even put it on the screen and it updates in real time. It shows you your real-time conversion values. So it's definitely the tool that I would recommend to use. So there are no more questions there. If you have anything to add, if you would like to add something.
No, it was great. I always like to talk about this subject. It excites me. So using Qonversion as a leverage, Michael, you make our life much easier, I would say.
Yeah, that's the best thing I can hear. It's our our goal to make life of developers, of founders, of those teams that are building apps easier. And there are a lot of small teams with several developers. They don't have a lot of resources to build all this infrastructure to monitor all metrics, and we put a lot of effort into building this and making it easy to use and really helpful. So yeah, once again,
Yeah.
thank you for joining this webinar. It was super interesting. We'll share the recording for this webinar in a couple of days. And once again, for those who are listening, if you want to check out what's your app valuation, go to Bluethrone, and you can pretty quickly figure out what's your current app valuation. So I guess that's it from our side today.
Thank you,
Thanks for
Michael.
joining us.
It was
Yeah,
a pleasure.
thank you, Alon. All right, bye. Bye, everyone.